Well, I do think there's a little bit of jockeying because the consensus trade is that we will release the market for potentially a rally attempt going into the final 8 weeks of the year. That is, I think, what history says, but it also has gotten the index, the S&P, right up into this zone where it's at kind of a critical juncture, right? It's right near its 200-day average. It's right in the middle of this area where it's traded a tremendous amount this year, and also right before it fell off a cliff as earnings season got going. So all these things, I think the market's been quietly trying to repair itself, and I think once the election result is in, you're going to see it released to see if, in fact, this test can be passed. Basically, we can get true follow-through buying after we've gotten above those recent lows. By the way, October 11th, that was that first wave down. We had the markets in turmoil special. 27, 28 was the level. We're 1% above that. So we went down from there and now up from there. So we're still knocking around the lower end of this range.
Mike, I mean, those historical statistics that Eamon's been through, others have been through so far today, are truly remarkable when you look at the post-war era in terms of the rally you see post the midterm results. I guess that has typically come as well with pullbacks coming into them as markets sense that uncertainty and they don't like uncertainty. Clearly we've had a big pullback coming into these, but has the midterms been the factor explaining the pullback? And if not, will that mean there's going to be a rally?
According to Larry Kudlow,
no, if you stacked up all of the issues that the market has been tussling with, obviously Treasury yields still at their highs. 2-year note hit something like a 10-year high today, right? Fed's going to remain active. That's been an issue. And I do think kind of the uncertainty around whether earnings can be extrapolated to grow into next year, that's all still with us. But, you know, the general fundamental backdrop didn't change much, but stocks came down 7% in October. So the question is, was that a change of trend or a buying opportunity? The market's about to try and kind of tell us all those things. By the way, the market is up 65% of the time in any 12-month period. So saying 18 out of 18 times you're up every time, it's not necessarily decisive.
It's just taking a long-term perspective on equities is one way of putting it.
Kari, do you expect history to repeat itself and for the market to rally post-midterm elections into the end of the year?
Well, I haven't been with you guys for a while, certainly since the World Series. So I just wanted to say, shout out to the Red Sox here in Boston. I also want to draw an analogy about sports fans and investors. We all live based on experience and expectations, particularly in the market. And if you're a sports fan, if your team wins 108 games in the regular season, you might expect them to go to the playoffs and go to the World Series and hope that they win or expect them to win. And in fact, they did. So here we are now with a market that has started to shake and have all sorts of anxiety about its expectations. We had an experience for almost 2 years where every time companies reported earnings, they went up. And the guidance was better, and we had low inflation and low interest rates and a tax cut coming, and it all came to be, and stocks went higher. Now we're seeing some disappointments. Expectations have had to reset. The market dropped 10% from peak to trough in a very short period of time recently. And so now here we are with many stocks, 33% of the S&P is down 20% or more from its 2018 high. Do we feel as if these prices are low enough? Is it time to buy? And the answer, of course, is it depends. You know, it depends if the company can pass through costs, if we have the type of environment, market share growth, strong balance sheets, and if the market is able to find a place to rest and go up from here. Very, very rarely is there a V-shaped bottom. So it's about when investors become comfortable that Amazon down 20%, Alibaba down 30%, the housing stocks down 40% to 50%, banks down 30%. If it's time and we're comfortable, I think it's okay to nibble.